Right. Right. Recording has started. Okay. So thank you very much for all that have joined today. Okay. So this is what I'm talking to you about, long-term strategy. Okay. This particular chart of mine, okay, has been shown since last year. Okay. So this is telling you that sometimes to get the best price, you need to look at it from a very, very long perspective. Okay, you need to look at from a long perspective. Okay, so once it comes to my Black Friday sales best discount price, this is where I'm going to be getting this a bit long. Okay, also if you look carefully at where my entry was for this to short, okay, my entry for this was quite to short was quite a while ago. Okay, and I'm still in this trade. Okay, and I'm hoping, not hoping, I'm going to be planning to go to my Black Friday sales target. Then I'm going to take that as well. Okay. If I now look at my GBP USD, okay, that also is going quite well. Okay, towards my target. Okay. The entry trigger was here. Okay, if you look carefully, this particular one, okay, it is going quite well. So what we're going to be doing very, very soon, okay, is we're going to look at what we call the fundamentals. The fundamentals is the 10-year treasury bonds, the euro, which is the German 10-year treasury bonds, okay, and also the UK's 10-year treasury, okay, and also the Dixie, okay. These are our key components that is going to tell us how to trade this. So for the time being, okay, what we're going to do is we're going to look at a particular one called the USD CAD, okay. And then we're going to do the market structure analysis, okay. So we're going to find out what's really been going on, okay. So since our last analysis of this, okay, we have seen that this particular price is going away from this zone, okay. So this is telling you that this is where price has moved and it's going towards a particular direction, okay. So what we need to then understand is if we are doing this intraday, okay, if we're doing this intraday, is to figure out where is the price is going to go, okay. Daily, it's showing as a bearish movement, okay. So on the hourly, okay, it is making substantial amount of downside, okay. If we look at from the 5 minutes, okay, it is telling you now it's in good position, okay. So if we were to do to the 5-minute chart, okay, first of all, mark the zone as in where price did not react, where price reacted from. So if you look carefully, there's some wicks there. That is where the price did not go above. So that is my point of interest, okay? If I now look at the top part of this, okay, there was some wicks, okay? That is also where price did not go above, okay? So these are my supply zones, okay? These are my supply zones where the price is going, okay? If we are to go a bit more further into this, okay, what we need to see is where is price most likely to go towards. Price did not go below here, okay. So what you can see is this one I'm only going to be doing for the body, okay, the body itself, okay, because that black body is enough of the region that I need to be interested in, okay, nothing else. So this is how much the price should be traveling before I enter on a buy, okay. If I now look at from this particular point of view, we've got the wicks here, and this is our best time to buy, okay. So by marking these zones on the 5-minute chart, okay, we can look at where price should be going towards. And if we look at reversal points, we either buy from here or we buy from here. We do not just sell in the middle. We sell from either this zone, we buy from this zone, and nothing else. Okay. Until then, we basically stay on this lovely journey and we go from one station to the next station to the next station. We either continue with the trend or we get another train and we go in the opposite direction. Okay. If we now look at it from a minute point of view, okay, look at how price is going from this station to this station. If we now look carefully, there was some wicks here. So that is telling me that another zone is here. Okay. So if we look at this zone and now make sure it's corresponding to the supply and demand. Okay. So this is telling you price did not go above here. Okay. If we look a bit more into this, we've got a bit of retracement and then we've got some price there. Okay. Price did not go above here. So price is going further down, okay? This is telling you that price is continuing to the downside, even though it's a 1-minute chart, okay? You still can do this on any time frame, okay? Remember, the overall bias is sell on the daily. So we are going with the trend, okay? We are going with the trend on the intraday, okay? Look at how it's doing this on the 5-minute chart, okay? And look at how this is doing it on the minute chart, okay? Look at how price moves according to the trend. Unless you see a reversal, we are not going to be doing anything else, okay? Mark the charts in the systematic way. This is all about market structure, how market is moving from one zone to the next zone to the next zone without any indicators. So within the next 2 seconds, okay, we're going to see another candle form, and let's see where this one is now going to move. Okay, so as we can see here, okay, price did not go above here. Okay, so we can get the price in such a way that it is being trapped. Trap the price, trap the price, trap the price. Okay, you will see this on quite a few different things, and this is the best way to understand how market moves. Okay, if market is moving in an upwards way, go from the 1 minute to the 5-minute and figure out what is it doing there. So the one time frame above would give you a better indication of, is it going to break that zone or is it going to continue in the zone, in the trend that it's supposed to. Okay, remember the overall trend is down. Okay, we will see a reversal when this is now reversing. Okay, so now if we use the line chart, okay, we use the line chart. Has it moved in the opposite direction? Yes, it has. Also, if you look carefully as what I'm trying to say here is it needs to break that zone. So if I now just change that to about orange, okay. Right. Look at this. Think of like the neckline of a trade, okay? It has to break that high. If I now take that away, it must break that high before a trend reversal is continued, okay? We've also got a high here, okay? This is our short-term high on the 1 minute, okay? Price needs to go above here, okay, before we see a reversal, okay? At this moment, it hasn't broken this zone, okay? So by going from line chart to candlesticks, we're seeing some difference. But remember, the overall trend is on the downside, okay? On this particular candle, okay, we've got 15 seconds left, okay? And look at how we got a wick being formed. Touches the zone, goes further down, okay? This is what I'm trying to refer to you guys, okay, is understand the price, understand the nature of the price, understand how price is going from one area to another area. If you really want to do it a bit better, go to the line chart. The line chart is telling you now the trend is still continuing to the downside. Okay, we've got the trend continuing to the downside. Okay, you've got to be able to see this, okay? And this is without any indicators, okay? Trend has not broken yet, okay? So when we go back to our candlesticks, okay? Remember our supply zone here, because price did not go above here, okay? It's starting to sell more, and look at how this is done on the line chart, okay? Is it going to break that zone and go to the top side? It could, okay? So at this moment, okay, let's mark this particular zone, okay, as our bottom, okay? If price goes below here, so remember we need a confirmation of that candle, okay? Price is going to go up, a bit more up. Is it going to go further down, right? Now let's change it back to candles. It's starting to reverse, okay? This is good moment, okay? This is a good candle that's breaking zone after zone after zone. If we now go to the line chart, it's going from one, the price has reversed, but we need the close of the candle first. The close of the candle is relevant, okay? The close of the candle is relevant. So let's look at it from a candle point of view. We see wicks. Price did not go above here. Is it going to make a higher high now? Okay. Is this the reversal that we wanted to see? Okay. Or is it going to start to go around? Because remember, sellers are still here. This candle, is it going to break this zone, then go to the next zone? Okay. If not, it'll start to reverse. Okay. Let's now go back to the line chart. Okay. Is it going to reverse? Okay. This is how you could be seeing this on a line chart compared to a candlestick analysis. Okay. Some people prefer candlestick analysis, but see how price is starting to move away. Price is starting to move away because it's in the supply zone, okay? The bulls are no longer in control. If you look carefully, look at what just happened, okay? From the supply zone, price is starting to go down, okay? And this is how we can do this, okay? If we look at from a 5-minute point of view, okay, it hasn't really made any significant impact. Okay, let's go back to the minute chart. Okay, you're going to see the reaction. Okay, look at how price is just reacting. Okay, if we now go back to the candles, okay, we're going to start seeing either another forward movement. Okay, so remember, price will need go past from one zone to the next. So is the price changed? It has, because it broke that neckline. And that was the retest, and then it basically goes further. Okay. Anybody got any questions about this? Anybody got any questions about this? Good. Okay. by watching this on a line chart, okay, you can see how price goes from one area to the other, then you got your reaction. So if we now go back to the line chart, okay, we could now mark it with our horizontal line, okay, where price reacted from, okay. All this was price movement, then it was a retracement, price went further up, now it's reacted from that zone, okay. If we now look at it from the 5-minute chart in terms of what's really happened in there, okay, price has moved away from that. Look at how price started to move away from the zone because price took out some of the buyers because there was some stop losses there, and now it could be going further down, okay. Let's go back to the minute chart, okay. Let's now go back to the line chart and look at how price is moving back, okay. Price is moving back into the same area, okay. If we look at from the daily's point of view, okay, the overall bias on the daily hasn't changed, okay. There isn't any continuation to the upside. So if we wanted to, that was the liquidity stop there. So price hit there and start to reverse. Let's now go back to the minute chart, okay. Look at how price is moving from one area to the other area. It's going to go back, take another order and come back, because remember, price has gone from one area, hit it. Now it's going to be taking a retracement. If it's taking a retracement, it should go back into here, then it should go back. That would be your ideal opportunity for selling, okay. So if we now go back to candlesticks, okay, we're seeing a continuation, okay, a continuation, okay. Zone to zone trading, zone to zone trading, okay. Let's go back to our line chart, okay. The price hasn't moved, as in like made any pullbacks, so it's a continuation, okay. Using the line chart gives you more flexibility to stay in the trade than with candlesticks, okay. Has everybody got how to do this? Is everybody understanding this method now? Good. This is market structure. How market is going from one area to the other area, okay? And it's explaining to you. The more you practice, the better you're going to get at it, okay? The hardest to trade is always the 1-minute chart because it's very aggressive, okay? Very aggressive, okay? Look at it's going from one zone to the next zone to the next zone, okay? The buyers are not in this at all, okay? Selling pressure all the way, selling pressure all the way, okay? Look at even from the 5-minute chart, okay? We only take entries from the best point, which was the top point, okay, for the sell, okay? And look how it's going from one zone to the other zone to the other, okay? So remember, price reacted from this zone. So we should be seeing some rejection very soon. So if I now go back to candlesticks, okay, and let's mark our little demand zone, because that's our green candle I'm interested in only, nothing else, okay, the green candle. So change that, okay. This green candle, okay, is the best one, okay. If we want to get the whole wick involved, okay, so that would be the best place to buy, okay. So it's get a bit more tighter, okay. Now change it back to a line chart, okay. So If this zone is valid, it will bounce and go back up. Okay. Let's see if it's going to stay valid, or is the trade for the sellers going to be continuing. Remember, the first attempt, it failed. Second attempt, okay. Live price action, okay, you're seeing, okay, and let's see what's really happening over the next 14 seconds. Okay, it touched that zone, comes back in, goes back out. Okay, so are we seeing wick formations now? Are we seeing wick formations? Okay, we'll see it very soon. So let's see. Is this going to be a continuation, or is it going to be a reversal from that zone? Okay, so the next candle is going to be absolutely vital. So it's gone below, took certain stop losses out. Okay, and now it should be continuing with the selling pressure. Okay, it is nowhere near that blue line. Okay, going there now. Okay, so a new candle has been formed. Okay, and look at how that candle was, it's getting rejected. Okay, we're getting that spike. We've got the spike. So if we now look at candles, okay, it hasn't gone below here. Okay, it hasn't gone below here. So let's look at from the line again. Look, there should be the next candle that's been formed now. Okay, right. This is going to be very interesting very soon, because price is rejecting from this area. So it could be a continuation to the downside. Okay, so if we look at from the candles, okay, one zone to the zone to zone. Now it stopped from there. The wicks, okay. So look carefully how it happens. Okay, is that going to be valid? So over the next 27 seconds, okay, we will see that zone to zone. Okay, if you look carefully, that wick was the booster it needed to go from that area. So this is a very good zone. Okay, and look how aggressively it goes. Okay, we're looking at either what we call valleys and peaks, or mountains and ranges. Mountain tops, valleys. Okay, top of the mountain, bottom of the mountain. Okay, so look at how price is moving from one zone. So did not want to go in that zone again. Okay, did not like to. So a rejection from the supply zone. Okay, let's see what happens now. So we'll go back in, take another order. This is very getting interesting with all this. Okay, it's the second attempt, third attempt, fourth attempt. Okay, you're going to see at this before it decides to make its mind up. Okay, this particular zone is so far valid, and now it breaks it. Okay, it breaks it. Let's look at the line. Okay, continuation to the downside. This is our best optimal time to either buy from, okay, because that's the lowest it will go to. Okay, that's the lowest it'll go to. So for the time being, okay, let's mark this particular point, okay, as a reference, okay, and then see how it happens. Okay, right. Anybody got any questions about what you're seeing at the moment? Anybody, any questions? Good. Okay. So when I say to you, understand the price, understand the price, understand the price, okay, you've got to first of all look at where everything is going from the daily. If the daily is selling, you're looking for opportunities only to sell at the right time. Okay, so when price goes up to a particular high zone, that was the best time to sell from. Okay, zone to zone, zone to zone. Okay, it's going to go there, right? Let's see. So now it's made so far a temporary zone here, right? So we're trapping the price between these two green places. The green horizontals, okay, that's going to be our resistance and that's going to be our support, okay. Let's see what happens. And remember, the best time to go, we've got two zones. The best zone is here to buy, okay. Is it going to break that zone and keep on going further down? Okay. Look at how it is from a candle point of view, okay. If you look carefully, okay, you got the wicks. The wicks are there, okay. The wick entries, okay. You've got now a wick back from that zone, okay. Now, look at that reaction, okay. So let's see until the confirmation of the new candle, okay. So far we've made another zone here. So in between two zones, okay. So we're trapping the price. We're trapping the price, okay. Think of it like fish in water. Fish is going from one zone to the next zone, to the next zone, to the next zone. Is it going to go to the next zone, or is it going to continue to the downside, okay? If we now look at from candle point of view, okay, buyers are not in this market, okay. Buyers are not in the market, okay. Selling pressure is continuing, okay. Selling pressure is still continuing, okay. Let's look at from the minute again. Go back to the line chart, okay, and see how this is done, okay. We have just touched our green line, okay, and it's reacting again from that green line again, okay. Is this going to be our mini mountain and it breaks that zone, okay, and then it'll continue to the downside, okay. Marking your zones is absolutely crucial, okay. Marking your zones is absolutely crucial, okay. So see how that reacts from there, okay. That's our mini zone there, okay. So price is going to the bottom of that zone. So this is our discount price, okay. Remember, price was here at one point. Now it's going to the best time to buy into this, okay. But however, the overall trend is down. So we could be looking for better opportunities for selling pressure, okay. Right. So we do this on, if you want to do an intraday, do an intraday between 1 hour, 5 minutes, and a minute, okay. But mark your zones carefully, okay. So by doing this, you can see how price reacts, okay. Even if you look from a candlestick point of view, okay, you've got a wick entry. The wicks, those bullish, now it's become bearish, okay. And that is how you should be doing this all the time, okay. If we now go back to a line chart, okay, it's continuing to our best zone, our discounted zone, okay. We've got to see how price does that. We enter the buy where on the confirmation of that blue zone, okay. We're not gonna, because we're in between two zones now at the moment, okay. We'll see if price goes here, and then if we want to do, we go for a short buy, okay, and then see what happens, okay. But remember, it's a strong sell at the moment, okay. If we look at from the monthly point of view, okay, monthly point of view, there's quite a few rejections, yeah. On the weekly, it's starting to go a bit more down, okay. So we've got to see how price reacts from that blue zone. If it hits that blue zone, okay, and then it starts to reverse, okay, we could be going for a very good opportunity. So from that zone to this zone, that's 17 pips, okay. So remember, when we are marking, when we try to use the pips, we always take the last one out and we only use the first, okay. If it goes for the top side, we sell. But remember, we're going with the market. Okay. Okay. So we should be looking for opportunity to sell more than buy more, because the overall trend is to sell. Okay. So if we go back to candles, okay. Look at how price is reacting. Okay, you've got a doji. Okay, selling pressure now want to continue to the downside. Okay, and then we'll see how price reacts. Okay, overall, okay, we need to be, if we want to be buying, we should be buying from here, because a lot of buyers are here. Okay, a lot of stop losses are here. Okay, so look at from the 5-minute point of view. Okay, not much in here. If we look at from the line point of view, okay, it's starting to reverse a bit. Okay, but if you look at from the 1-minute point of view, okay, it's starting to go back up, go back to that zone, the blue zone, and should be reversing very soon. So that is why I'm telling you, okay, you buy and sell from zones. Okay, the zone entry. Okay, you're not buying and selling anywhere. You're buying and only selling from zones. Okay. Okay. Selling pressure should be continuing. Okay. Selling pressure should be continuing. Okay. That was your retracement. And then you should be seeing selling pressure continued. Okay. This is your mini reversal, and then it starts to go to the downside. Right. Okay. So when I want you to mark your charts in the same way. Okay. And then you'll see consistent results. Okay. Mark on 5 FX charts and 5 stocks charts. Okay. Doing the same way. We're not doing anything different. We're not doing anything different. Okay. I'm not telling you to do one thing one way and do something else somewhere else. Okay. Follow in the same way. Follow in the same way. Okay. So if we look at why it's happening, the main thing is we got to look at the dollar index. Okay. Dollar index at the moment should be buying. Okay. If we now look for the hourly, it's buying pressure. Okay. If dollar index is buying, okay, then our other one should be selling. Bank Nifty, yeah, we'll do Bank Nifty. Okay, so what I'll do, okay, I'll stop the call now, give you a new code, join with that new code, and then we'll do it again.